2,300 options on Tesla, done just 15 minutes ago at 1:10 p.m. It is now 1:26 p.m., May 25. So what do these unusual options mean? In this video, we're going to analyze these unusual options and then show you how we are trading Tesla based on these unusual options. For this July 21 on the options chain, you'll see this is for the 200 strike calls and 230 strike calls. So if we look at that strike price here, you'll see here the 200 strikes here for those 2,300, because it is less than the open interest of 17,000. Same here at the 230 strikes. This 4,700 is also greater than the 2,300. That these could be closing orders, and that's something to be aware of. And so we will continue to monitor this data to see what it meant if they are closing orders. However, we currently started a position on Tesla, assuming that they are opening orders. And so you'll see our position is here. We assume if they were opening, we got into a position where it is a vertical bull call spread. You'll see here when we analyze this trade, buying the 200 strike calls and selling the 230 calls. So this is basically saying that by July, Tesla should be above this break even, which is about 206. The reason why it's 206 instead of 200 is because we had to pay about $630 for these option contracts. So you have to add that $600 plus the 200 strike price. So it's about, or the $6, right? So that's 206. But you'll see here, if it does rise sooner before expiration, though, it will be profitable right away because our break even is at that purple line. The blue is the expiration line. And so as the price of 184, where Tesla is trading now, you'll see here, as it goes up in price, it will be profitable. The reason why we wanted to get into this position now is you'll see this strong bullish trend for Tesla. It has pulled back a little. And so it is possible, technically, that Tesla could be going up, breaking this 200 level to retest this level again. And because we already have a short position on this trade, we feel more comfortable going bullish now at this time to based on these unusual options. If you recall, we have a bearish butterfly trade to take advantage of the volatility. This trade here, and it is over here. When you look, it's the same expiration cycle, but now it's on the put side here. You'll see here this trade that we did prior hand. And so make sure, if you want to see how we constructed and why we constructed this trade, to watch that video at the top here. We'll put a link there. So this is because we have this hedge already on, we're not too concerned about putting on a bullish trade based on these unusual options activity. And if we find the data coming in tomorrow or a few days later that these were closing orders, which signals bearishness, we will close our bullish orders. So make sure to subscribe and you have the bell icon clicked. If that happens, we'll update everyone. But until now, then we are going to be bullish on Tesla to see if it will cross that 200 by July 21. And yeah, that's our current thoughts on it. And again, this is all the way till July. We have until this date And keep in mind, because it's July 21 expiration, you see here earnings right before that expiration. So you see this July 19 is actually the next earnings report. So anything could happen, and we may want to take that trade-off before earnings so there's no risk. Well, it'll all depend on the unusual options data and our analysis on that. So be sure to subscribe so you get updated, and smash the like button, and make sure to comment below on what you think is going to happen to Tesla. And take care, everybody, and good luck.